everybody. Thank you so much for coming in tonight. I know it's very close to holidays, so we've got one more meetup with ARCV before we close off the year. So my name is Shang. I'm one of the co-organizers of ARCV alongside Anna Cho, who's Anna, you can raise her hand. She actually founded the group, so we would not be here without her. And in terms of, I guess, who's a first timer to ARCV events? Okay, cool, awesome. So you guys are in for a treat. And the way that we typically do things is that we pick a topic, and this time it's going to be, in the name AR, actually with VCs, quite a few VCs in the field. And the way that we do it is that we will bring them up one at a time for a fireside chat, so we get to know them a little bit better. And then we're going to bring them all up together for more of an industry-wide type of panel that you're more used to. So I'll go through this real quick, and afterwards it's going to be Q&A for all of you guys in the audience, and then we're going to let you go and talk amongst yourselves. And today's event is sponsored by Epic, Google Launchpad, Galvanize, which is this venue here, and Surfy, which is the company that I work for. And Epic is a mobile checkout app that Anna is building, and if you want to be a beta tester, please follow this link. And Surfy is my company, which is based out of Milpitas. We're a 13-person engineering team. I'm the only non-technical person. What we do is we map out entire world, or entire cities in, hopefully entire world soon, entire cities in 3D using satellite imagery, and we figure out a user's location by using the ground images taken by mobile phones. And once we know their exact location, as well as loading the 3D maps that we've already created from satellite imagery onto the phone, you can do a host of very interesting AR things. So for those of you who are in AR, you know that localization is pretty much like a building block, the fundamentals of any kind of AR experience. So we solve that on a city scale on any outdoor type of location that's covered by satellite imagery. So currently we have coverage for 14 cities in the United States, and international coverage in parts of Tokyo, Seoul, and Shanghai. Shanghai is actually coming in Q1, but that's coming out soon. So, and we're also actually hiring right now, especially for an Android mobile developer who can actually create the SDK for our next stage. Currently it's used as a Unity SDK. Cool, okay, so before further ado, we are going to bring up our first speaker, Victor. Victor, can you come up? Cool. Victor Wang is the head of investments at HOF Capital, where he focuses on frontier tech. Prior to joining HOF, Victor spent 4 years as a tech investor, investment banker, and startup advisor in SF, New York, and London. And before that, he worked in management operations, leading a team of over 150 employees, generating $30 million of annual revenue. Victor has a bachelor's degree in molecular cellular biology with a minor in nutritional sciences from Berkeley. Welcome, Victor. All right, so the first off, which is, can you tell us more about HOF and what you do there?
So HOF, we're a global VC firm. We have over 70 LPs from 33 countries and 5 continents. And what we really focus on is finding what I would call ambitious, mission-driven entrepreneurs who are using technology and innovation to solve really challenging problems and to hopefully build market-leading businesses. And what we aim to do is to leverage our resources to help those companies and those founders to scale much faster than they could on their own. So what we try to do is we try to provide long-term focused growth capital and VC capital. And what we also try to do is to try to connect them with enterprises and other investors who could really help them on the journey. And my role is the head of investments at HOF Capital.
Got it. And how did you get into the wonderful world of VC, as my friend Harry Stebbings from 20 Minute VC would say?
Yeah, I had a very circuitous journey.
Okay.
As you know, I was originally pre-med.
Right, yeah.
And the reason why was because my parents recommended.
Okay, that sounds like me too. I actually started as MCD at Cal before switching over to Haas, but anyways, yeah.
We're Cal and
go Bears.
But I was always actually, before that, I was more of a sci-fi kind of a gaming enthusiast.
Okay.
Anyway, during university, I learned a lot more about kind of what I want to do with my career.
Yep.
And I learned that what I really aspired to do was to have more of an impact on a global level. I felt like if I went to become a doctor, I would have an impact on maybe thousands of lives on a local scale.
Right.
But I really wanted to impact billions of people on a global scale instead. So I started to read more about the best entrepreneurs, investors, and business people, and I got really inspired by that. So I decided that I wanted to switch over into business, and I also wanted to go and work closer with the tech industry.
Okay.
So eventually, I managed to pivot my career to technology investment banking, and did that for about 4 years. So I got to work with startups and help them to fundraise and to eventually exit. And then I had the chance to join up with Pop Capital afterward, and that brought me even closer to working with entrepreneurs and being with them on the long-term journey and not just on a transactional basis.
Right.
So I've been really excited to be a part of that. So I've been here for about the past 3 years.
Oh, very cool. And if I remember correctly, you kind of grew up in the Bay Area, and then you moved to New York for banking, and then you also went to London for a bit of time as well, right? And then kind of came back here, kind of full circle. How would you compare or contrast the different kind of like tech ecosystem in each city?
So I want to be respectful to
Be honest.
London and New York. So they're really great tech ecosystems, and there's a lot of talented people there, and a lot of talented investors and founders and company startups. What I would have to say is that in comparison, I still feel like San Francisco Bay Area has a much higher density of tech-focused talent, founders, startups, investors, and in general, I would say that the level of ambition here in the San Francisco Bay Area is a lot higher than in those areas, and I think a lot of it is due to the fact that we've had a lot of previous success. We've had people who built market-leading companies that are worth now hundreds of millions of dollars. And we have this whole, community and ecosystem to help facilitate people to get to that, endpoint in the future as well. So I think those are the two differences.
Right, I see. And I guess like outside the valley, what are some other? I guess like what is a probably top other ecosystem city?
I would say as kind of a general countrywide level, I'm really bullish on China.
Okay.
And what they're doing over there. I don't want to be alarmist and controversial, but I do believe that there's a high likelihood that in 10 years, China could overtake the U.S. as number one tech kind of center of the world.
Interesting. So I guess maybe what are 2 or 3 major factors do you think that contributes to that?
There's so many different factors. I'd say one factor has to be the Chinese government. It supports the technology ecosystem there far beyond any other country really in the world. And they're extremely kind of focused. Like when they want to do something, they focus their resources all on doing that.
Right.
So I think they have a huge government advantage. I think they also obviously have 1.5 billion people, and there's a lot of hunger there to succeed. The culture there is very generally education and achievement oriented.
Right.
So I would say that human capital is a huge factor as well. And I would say that just because the market size there is huge, it's 1.5 billion people, right? It's 5 times the population, or 4 to 5 times the population of the U.S. It's easy once you perfect a product for the Chinese market for you to reach a massive market, larger than any other market in the world. So that's one.
Is it because of essentially that wealth of training data that's generated by that much of populace?
Yeah, actually, you raise a good point that I didn't mention earlier. The Chinese population, as big as it is, also doesn't care about data privacy as much either.
Right.
So they have a huge advantage when it comes to developing AI and training their models on data.
Got it. Okay, so I guess we're going to end your section with Chinese AI robots taking over in 10 years. Thanks a lot, Victor. So next up, we actually have Greg Castle. Greg is the managing partner of Anurag Ventures. He is an entrepreneur and corporate marketer turned VC with a keen interest in early stage disruptive technologies, especially VR and AR. Originally from the East Coast, he now calls the Bay Area home and enjoys all the amazing people and opportunities this place has to offer. Please welcome Greg.
Just read my LinkedIn.
I did, and as well as your website. And well, first off, can you tell the audience, I guess this might be redundant for the audience here, but Anorak Ventures, how did you come up with that name? I already know the answer, but you should explain it.
You sure you know?
Anybody who read that book probably would. But.
So it's actually got two meanings. So
okay.
Anorak is the avatar of the creator of the metaverse in Ready Player One.
Yeah.
And anorak is also a slang term used in the UK to describe somebody who's deeply interested, bordering on obsessive and niche subjects.
Okay.
And those are the type of founders that I tend to invest in.
Interesting. Would you describe yourself as one of those as well?
No.
No, okay, pretty broad. More broad.
I consider myself an anorak whisperer.
Okay,
so I can communicate very well with people who have very deep interests in select areas.
Got it. And so, how did you get to where you are today? What was your journey like?
So, right place, right time, right friends.
Okay.
I also, like most VCs, had a circuitous path. Started out working for the man in finance, did that for a couple of years, and went into the restaurant industry. Was in the restaurant industry while living in London for 6 years.
Oh, wow.
And then always was fascinated by technology. Had a friend who started a successful computer graphics technology company. Moved back to the States to join him. That was in video game technology. Got a taste for the whole ecosystem, how it all worked, rendering, all those things. And we were eventually bought by Autodesk. I stayed on at Autodesk to head up marketing for their games technology group.
Yeah.
So everything under 3D modeling, 3D animation, all of those things were all under my purview. And then, kind of got bit by the startup bug, started making investments.
Yeah.
Had an early investment that worked out very well, that gave me the capital to just continue investing. And after enough time and enough confidence, angel investing using my own money, I decided to start a fund about 2 years ago.
Oh, very nice, yeah. And you're pretty well known in the VR community for being one of the early investors in Oculus. This is kind of the home run you were talking about. So how did you get to know John and Palmer?
John?
Carmack.
So Carmack joined on later. So the founders are actually Brendan, Nate, Michael, and Palmer. So it's 4 of them. So Brendan and I went to college together. And worked together. So the company that I came back to work for in the States was his first company. Where I worked, me, Brendan, Nate, and Michael all worked together. And then we met Palmer at about the same time. And Brendan and Nate and Mike really kind of took the bull by the horns and, worked with him, saw really the future, and the rest is history. I had the opportunity to provide some seed capital and have, because of my relationship to the guys, have a good, I like to say I had a front row seat to
for sure.
the amazing journey. It was pretty amazing experience.
Right, and I mean, you have a very extensive background in business development and marketing. And so what are some of the biggest issues in that, in that field that you, or in that particular part that you see with startups that you would have, advice for?
I invest in companies that are being built around differentiated technology. So I do a lot of deep technology. I'm not solely deep tech, but it's a big part. And so, there's always a challenge, and I've had this conversation with many investors who invest in deep tech. Is you've got these people who are creating this amazing technology, but oftentimes, marketing isn't their core competency.
And totally not,
And so figuring out, I spend a lot of time, once I find the technology very interesting, I spend a lot of time drilling into the go-to-market plan for that technology. It's challenging, when you're introducing a new product, let alone a new technology, when you're introducing a new product, there's a significant amount of thought and strategy that needs to go into marketing. And it's no cakewalk. It's a really difficult thing. You compound that with the fact that it's perhaps it's based on a technology that people are not comfortable with, haven't heard of before. It compounds the whole problem. So, it's a unique problem. There are certainly people who have solved it beforehand. I think Oculus did a fantastic job of solving it. Focused on a very specific area. Really, demo. The team is so phenomenal at creating demos that enable them to raise, a incredible amount of money from top-tier VCs. And the reason they were able to do that was because they weren't sitting there talking about, the upgrades to the IMUs and the latency that they were able to decrease and the 6DoF and all that shit. They were able to do it because they created unbelievable demos that they put people in, and people were just like
blown away.
Holy moly!
Yeah.
Okay, I get it. And it's key to their success.
Right, and were the initial, demos, a little bit shorter because.
Oh
yeah. Okay.
Yeah, the first demo was very short. It was a really brief experience where you're just kind of floating around in an environment.
I guess before this kind of initial nausea might kick in, actually, before kind of finding some product.
Yeah.
Good stuff. Well, thank you so much for sharing kind of the early days of Oculus with us as well. So please give it up for Greg. Next up, we have Prashant Thoraseka. Prashant? Cool, awesome. Prashant is a principal at Tuesday Capital, formerly known as Crunch Fund, where he advises portfolio companies and decision-making on fund investments, as well as due diligence and market analysis. His wide-ranging expertise from AR to blockchain have helped his firm make informed decisions in complex, rapidly advancing markets. So welcome, Prashant.
Thank you.
So tell us first a little bit more about Tuesday. And what you're doing up there.
Yeah, so we were,
Is it working?
no, it's not. There we go, power button. Power button. That's good. That's a tricky one. You have to turn it on. Okay, so Tuesday, we used to be called Crunch Fund. We changed names about 6 months ago to avoid confusion. People didn't know how we were connected to TechCrunch and Crunchbase and all of that. The firm was started in 2011 by Pat Gallagher and Mike Arrington. Mike Arrington did start TechCrunch and Crunchbase, and Pat had been investing for about 15 years at that point, and they were best friends in college. So we have invested in about 230 companies to date. 26 of those companies are now unicorn, $1 billion+ valuation companies. Of those 26, 23 we invested in at seed. One was Series A, and 2 were Series B. So we have invested in a lot of companies that have done pretty well. I have contributed very little to most of that. Actually, no, one of those. I have a portfolio founder here in the audience, and I'm pretty sure his company will be one of those.
Yeah, we're looking at you. Brian. Good stuff. And how long have you been with Tuesday?
So I started off as an intern 5.5 years ago.
Oh yeah?
I joined
Okay.
full time about 4 years ago.
Oh nice.
So
And how was your journey getting to there?
So a good friend of mine in college dropped out of college to start a company. That company failed, and then he ended up working at what was then Crunch Fund. He recruited me to join. I was a high school entrepreneur. I liked technology and I liked starting businesses. I worked mostly on open source software, which means I worked on things that were free.
Right.
So I built open source free software, and then I liked starting businesses. It wasn't until I was much older that I connected the ideas of building software and having a business. Those things were separate concepts, but it just so happens that what I do now falls at the intersection of those two things. When I was in college, I spent a lot of time working with people who were starting companies out of college, meaning they were dropping out. I first met, you have to do it pretty hard to run a company and be in college. If you think you can do those two things, well, that's where you've already gone wrong.
That's what I see about that. But anyways.
Well, yeah, that's another conversation. But yeah, anyway, sort of like what Greg said, it's like you were in a certain place, random things happen, you get connected, somebody likes you, and then you get pulled in. Like I knew a bunch of investors, so I was pulled in to join this firm. I thought it was an internship, and I thought I would go start a company and do something else later. It was an internship, but I never stopped working. Like the internship was over, and then they just kept sending me work to do it. I was like, at the time I was actually doing Teach for America. I was working in the high school math.
Oh yeah? Okay.
So I went back to teaching classes, and they kept sending me deals to look at. I was like, guys, like
Wait, so you're doing TFA and Crunch Fund at the time?
There was a year where I was doing both of those things. I was working part-time and I was doing Teach for America, so that was totally great.
Can you imagine if you're a grade school teacher, or middle school, was it? Middle school or grade school? High school. So high school teacher, after work he goes to go invest in startups. That's a pretty badass high school teacher.
So I had this one class. Our schedule was a little weird, but there was a period in the middle of the day where they had to squeeze in lunch. So that class was just 20 minutes longer than every other class.
Okay.
And you could kind of do whatever you want. Like you didn't have to, you would teach for normal class. You just had this extra time. So we would do extra tutoring or whatever. Something was getting needed it. But sometimes what we would do is we would test new social apps in class. So it was like a perfect little round for which I'm pretty sure was okay. And if it wasn't that, well, it was a long time ago. So
Exactly.
It's okay.
So what do you think? So you were in TFA for how long?
2 years.
Oh, 2 years. Okay. Any transferable skills from TFA that applies to VC at all?
Being very patient and dealing with chaos all the time.
Okay. Yeah. That sounds like the startup world.
Human emotions and feelings.
Okay.
Saying no to people a lot.
Oh, really? Okay. Like, no, you can't get that A. Do your homework.
Like, you can't, hit her.
Okay. Wow. All right.
Don't throw your phone at somebody because you're mad at them. Don't throw the desk at me, please.
There you go. Very cool. And I guess, so how are you seeing, the field of kind of AR evolved over the past year or so?
Over the past year, okay. Well, so there were things that people were excited about that have entered the market, and they proved to not be that exciting. So that's one thing that's changed. This is talking about hardware devices.
Right.
There has been a very clear shift in a little over the last year, really over the last 18 months, of the large technology companies shifting to mobile AR-based platforms and moving away from other types. I know at least one major tech company will be shipping a AR device of some sort that's not yet announced.
Right.
We'll probably hear about it in about a year, and it's probably on market in about 18 months. But besides that, everybody's focused on mobile AR. Most VCs have shifted to focusing on smartphone-based AR.
Right. Okay. Actually, I realized when we started going into the AR part, but we're going to circle back here as well. So please give it up to Rashawn. Thank you. All right. Next off, we have Nathaniel Kristoff, who is a former investor at Wildcat Venture Partners, an early-stage VC looking at how intelligent systems affect a broad range of verticals, including workforce innovation, retail, supply chain, to name a few. So prior to VC, Nathaniel, can I call you Nathan or Nathaniel? Nathan? Okay. All right. Nathan spent the majority of his career developing AR and transportation products, including AR motorcycle helmets and electric race boats. We should definitely get into that. Yeah. He is also a member of the World Economic Forum's Global Shapers. So welcome, Nathan. So I guess first of all, how did you get into Wildcat, and what do you plan on doing with your sabbatical?
Yeah, good question. So similar to everyone else's story, it kind of happens by accident.
Okay.
So the boats that we were building were autonomous. So
the boats that you were building were autonomous.
Yeah. So this was in 2008.
Okay. I just wanted to pause on that and highlight because he just said it so casually. But okay.
Yeah, this was in 2012 to 2014. So autonomy became a business model in 2016. That's how fast it comes about. But when I was building that, I met the former chief talent officer at Wildcat, and Elizabeth Patterson, and she ended up tracking me across that startup and then into my next startup, which was Scully, which was building augmented reality elements. And over 4.5 years, she's kind of tracked my journey, and then eventually introduced me to some of the GPs of Wildcat. That's how
got it. Okay.
Yeah, just really finding people to sponsor you.
Right. And I've read some of your work too. I mean, I kind of love the frameworks that you use. For example, analyzing the impact of AI in terms of inelastic and elastic collisions. I was wondering if you have any frameworks in terms of analyzing the startups that you looked at while you were at Wildcat.
Yeah. So in the context of augmented reality, so that's a broad technology. So Wildcat's a pretty general fund. Where they're looking at approximately, give or take, 13 or 14 verticals at a time, spread across 4 GPs.
Oh wow.
So when you think about augmented reality as a technology, it affects all those verticals. So it affects edtech, it affects supply chain, it affects all these different buckets.
Right.
And so when you're thinking about like what is a good application of this technology, you're forcing you to think about the actual problem as opposed to like what this technology is good for.
Interesting.
So it forces you to look at technology of today instead of technology of tomorrow.
Yeah.
But it's like that's what you can build a business off of right now, which is like more of just time on your terms versus like some ridiculous new hardware thing that's going to take 3 years to develop and then 5 years to commercialize.
Interesting, right. And you just left Wildcat, and so what are you thinking about doing during your sabbatical?
I'm going to travel a lot.
Okay, yeah.
I'm not going to build a hardware product.
Right, that was most of your life before VC.
I've done 2 hardware companies.
Okay.
Say that again.
Yeah. Well, speaking of hardware, because you mentioned electric boats, but now we know that they're also autonomous.
Yeah.
Can you tell us a little bit more about that?
Yeah, so the interesting thing about building something that's electric first is that when you do the power mapping optimization for an electric vehicle, you basically automatically add an additional level of autonomy to the vehicle because you have to optimize for
Right.
distance, which means you're automatically mapping for speed.
Yep.
And so when you have to automatically map for speed when you're doing route planning, you basically level.
Oh, interesting.
Yeah.
Okay.
Because you have to control for the route, which is effectively lane change, which is what people know right now. But then also when you control for speed, you add that.
Got it. So
it's
by
like, you do this,
nature,
can you do this?
yeah. So by nature, it's electric. You actually have to make it semi-autonomous in the same way.
Yeah, exactly.
Very, very cool. Awesome. Okay, actually, I think at this point we could probably bring the rest of the panelists up. I'll shift over here and we'll talk more about AR. So now that we have a huge wealth of knowledge basically up on the stage, we're gonna dive right in actually. So starting with, what's your thesis around AR?
So I feel like I'm preaching to a choir here because I'm sure everyone here believes in AR. I would say that it starts with like the correct market timing. Basically, never before have we had such good input sensory devices, right? We have better cameras, depth sensing cameras. We have, in these devices, which more than a billion people on this planet have. We have GPS, IMU, accelerators, accelerometers. We have basically the ability to really track the real world and understand the real world in much greater depth. We also have more CPU and GPU processing power. We have better graphics, rendering engines. We have better SLAM algorithms, etc. We basically have a lot of the technological underpinnings that we need. And we also now have a lot of capital infusion from large companies and small companies to develop better hardware as well. Hardware that is becoming smaller and also more affordable. That is finally also enabling better software and content to develop or to be to leverage. In addition, we have better developer tools, right? Some of it also developed by the large companies, some of it being developed by the smaller companies. These better developer tools are enabling better content applications also to be developed. So all of this is coming together. And the reason why this will be a big market opportunity is because for the first time, we're going to have these. Well, actually not for the first time. We've already had we implemented for over 10 years in different use cases. But now we have the ability for we actually leverage on a broader scale by the billions of people around the world.
Right. From a distribution standpoint.
Exactly. So and then the use cases now are going to be so expansive. There's going to be huge, massive, market opportunities. I don't want to like say anything that everyone else is going to say, so, but like basically, like in a nutshell, that's that's the thesis.
Got it. Thank you.
So we'll just go down the line. So for me, I think most of the work in AR right now has been focused on immersive visual augmented reality experiences, and while I think those will eventually be fairly widespread, I think hardware is a major constraint today, and I don't see a pipeline to hardware that does that well. By that I mean creating immersive visual content in a form factor that people will use rightly. I don't see that coming anytime soon, so I'm more focused now on information snacking type applications, things where the purpose of AR is not to overlay dancing Pikachu or something that looks cool, but rather to give people information, which can be done through audio or display, basically.
Right, speaking of audio, I mean, Bose just announced Frames, which is going to be launched in January, so next month as well, right? So.
Yeah, that's a product I'm looking forward to trying.
Cool.
So just to double down on that hardware piece that Sean was talking about, the hardest thing that we had to build when we were building Scully was just the optical stack and making sure that it was perfectly in focus, et cetera, et cetera. I mean, we spent way too much time on that. I was just at an augmented reality conference 3 months ago, and now Open, the primary driver of these micro displays, has it embedded, including a waveguide attached to the people projector. So like in 2.5 years, they solved that problem. So it's not perfectly in focus, et cetera, et cetera. So I was surprised when Apple just bought a waveguide manufacturer the other day. To go try to build their own stuff, obviously, but the hardware part has been woefully disappointing. I think at one point, I think it was one iteration ago, the HoloLens was more expensive if you just took all the sensors off to sell them than it would be to buy the demo units. And so I'm looking for things that are like practical, high value added things. For example, like on a manufacturing line, how do you assemble a fighter jet, for example? There was a big Dartmouth project that was going recently last year.
Right. And actually, speaking of hardware as well, I mean, ODG just this past week just announced that they're going to be selling off all their patents. That's basically kind of waving the white flag off that. This kind of doesn't bode well for the hardware side of AR, at least on the AR glasses side.
So I would say two things. One is, this, I'm so sick of this. It's just awful. This was not designed to do what we're doing with right now. Just sit there and stare at it and crane our necks for hours during the day.
Sean, you're gonna have to stop Greg from throwing his phone at the audience.
I'm well trained in this.
All right. Good going.
So I think, I think all the believers know that this is not natural. This is not here to stay. This is a stopgap. We'll get there in the future, but it becomes, for investors, it obviously becomes a question of timing. I think a more natural interaction between humans and technology is something that I'm very much looking forward to. Prashant and I have nerded out on this topic for hours. We don't need to be able to realistically see a monster breaking through the wall. All I need to know is when my fiance is calling me, when my mom is calling me, when I'm going to be late for an appointment. I just need that information in a non-obtrusive manner. That means that, that doesn't mean that I have to go into my pocket, pull out a screen, immersive screen, beam photons into my face. Like, I just want to know really quickly that this is what's going on. And so I think there's going to be a lot of interesting opportunity for that. Although I was underwhelmed by Focals by North, it's a step in the right direction. I think Bose is going to be a step in the right direction as well. I think Apple will come out with something within the next year that'll be something similar. These are more HUDs than they are actual augmented reality, where it's just information. But
So, I mean, all you guys said some really, interesting insights, and let's put it in terms of a time frame as well, right? So, how bullish are you all regarding AR? Let's say in the short term, let's say within the next year, medium term within the next 2 to 3 years, and long term 3+ years. And if so, which part of that value chain is it the hardware, the content, the software tools that's required.
Go back down the line here.
Spot.
That's a lot of different questions in one.
For sure, that was a loaded question.
I think, look, for all these technologies, it's going to take time. I think VR, this is going to be a big year for VR with Quest coming out. So I'm more bullish on VR now, for sure, from a content perspective. I think AR is a little bit farther out. But for me, you know, as somebody who invests frequently in technologies, in companies that are building technology and they're slightly ahead of their skis, you know, in terms of whether or not the technology is ready for prime time, you know, look, I can get excited about a company that's going to be raising, you know, I invested in Oculus because I knew the team very well and I knew what they were capable of. And so it was easier for me to get comfortable with their approach, which was going to be a capital-intensive approach. 9 times out of 10, I'm not going to have that level of depth and knowledge of the team, and I'm actually more interested in investing in more capital-efficient projects where, like, they've got a short and medium-term solution to be able to bring the product to market and survive while it takes a while for adoption to kick in. So, you know, whether or not it's going to be for AR, it's going to be 2 years, it's going to be 3 years, it's going to be 5 years. Like a company that's working on core problems, that's remaining quite capitally, you know, conservative, and is working on potentially projects that could bring in revenue in the meantime, that's much more something that I'm interested in.
So in the short term, I'm seeing a lot of companies that are applying these very powerful cameras in our pockets in enterprise. And there's a million manufacturers of commodity glasses that are perfect for enterprise. So a lot of the problems that we're talking about here are actually the ones that touch consumers. Because for enterprise, there's a ton of solutions already, but they're, you know, it's a good way to, you would never wear them with helmet, they're impossible to wear.
Right, exactly. It's like wearing a helmet, basically. Right?
Yeah. Or just really hideous glasses with like massive cameras and stuff strapped to your face. And so in the short run, you're going to see, in my opinion, a lot of things around field management. So people staying in the workforce longer because they can retire, but they're not as vocal, so they're like the domain experts, so they stay at home. Yeah. And then as like customer service and field work gets escalated, it becomes like an on-the-job training, to short-circuit training cycle for field reps, so we about that kind of stuff. Yeah. And then basically every person owns a smartphone in developed countries, so they even factory workers, so they're walking around, they have a smartphone with them, and so they can scan stuff automatically. That's you're seeing stuff like cloud, stuff like that right now, and then in the future, hopefully we have some consumer-grade stuff that people don't be wearing, because like I say, having phones, so we need to get rid of that.
Right.
So it's
Okay.
All right, so agree with Daniel, actually. I think on the enterprise side, you've already got things that are being used. I think people forget that Google Glass Enterprise 2.0, 3.0, whatever it is actually being used. It's relatively limited, but there are some clear industrial applications. People are using OEG products for things as well. Some use these devices, although it's all a small market. I am definitely much more focused on consumer because I think consumer will be much bigger, and I think when we have widespread consumer adoption, that will be a kind of backfill into enterprise as well.
Right. So you're actually quite contrarian in that respect, actually, because most of the VCs I've actually talked to is more on the kind of enterprise first side than consumer.